Hello friends, thanks for joining me again. I called today's video the anatomy of a pump and dump. I don't really know if it was a pump and dump. In the market you generally don't know exactly what's going on. I form narratives as to what I think may be going on, and so long as the narrative makes sense and the price action continues to confirm it to be the case, I just go along with it. I remember Tom Williams said many times, there are no friends in the stock market, and if you want a friend to be with you while you trade, buy a dog. And that's probably true. He also said if he did get a dog, he would name it Upthrust. He thought that was a humorous name for a dog. So anyway, this is the chart. I was asked to look at it this week, and I found it so interesting, and we haven't talked about this on the channel so far, that I thought I'd make a video out of it. If we go back a little way to begin with and remove all those really large bars. Now we'll do a bit of detail in this, but there's no real accumulation on this chart. If you look back, there may be a little bit just down here, but very little accumulation on this chart as far as climactic action goes. You can see price moves along. Now, this is the first interesting bar here, and it's got a much wider spread, much higher volume, and price remains within its range very comfortably. Now, this is likely a buy the offer bar, and following it is the consolidation and absorption period. Whenever price rises substantially, almost always increased supply will be drawn out, and depending on what stock you're in or what market you're trading, the increased supply will come from profit taking from people who have bought lower, from the left, which is people who have been stuck in a losing position over here, and they've been holding on while price goes lower, and then when price comes back to their level again, they have the opportunity to get out for break even, and that's called stale supply coming from the left, or just supply coming from the left. And the other supply that's drawn out is short positions. Now, there are a few modest short positions in this market, but they're not very large and probably didn't play a very big part in this stock's trading, for the most part anyway. So, I'll call this a buy the offer bar, and this was the period of consolidation and absorption in response. There was a little mini bar here, but this bar is the next bar of interest, and this was another buy the offer bar, and you can see that there's another period of consolidation and absorption in response. And during those periods, there's more accumulation can be taken place, but these buy the offer bars are like a vertical accumulation bar. Generally, when we look at accumulations, you normally would expect them to begin with some sort of climactic bar and then a period of accumulation in response. But if there's no reason for a climactic bar to form, you can't form one by itself, not easily anyway, definitely not without going to great expense. So if there's no real reason for a climactic event in a market, if the traders, and in this case this is the active traders almost certainly playing this game, and you'll see my video where I talk about the markets and the players involved, this is the active traders who are most likely involved in this market. So there's no climactic action, there's no selling climax where a huge amount of stock gets moved at a low price, then an accumulation zone can form in response. If you want to buy a stock to accumulate it for whatever reason. It doesn't have to be for a pump and dump or anything like that. It can just be if you're a group or a syndicate or a hedge fund and you're wanting to accumulate a position in a stock, a vertical accumulation style is what I see here as a buy the offer bar, and then a period of consolidation and absorption, generally within the range of the initial bar, and generally you won't see price push back below the low of the initial buy the offer bar. That generally happens. Rules aren't hard and fast in the stock market, but that's generally what happens. So you've seen another one here. You've seen the period of consolidation and absorption in response, and then the same thing happens again. And when I say buy the offer, you know, in the market there's the bid and the offer. Well, these people come in and they buy the offer. They buy all the sellers up to a certain price level. You can see here they bought to this price level, here they bought to this price level, and now they've bought up to this price level here. And you see in response the period of consolidation and absorption take place again. Similar to this bar here was this bar here, and price did come back down and challenge the lows and possibly would have looked a bit threatening at the time, but then, and this is a little bit awkward here, but there's sort of like a period of bullish absorption here, and then you've got two little periods where some consolidation took place before the first bar of the pump began. Now if you draw the highs across there of the range, this was a massive bar. Look at how high the volume is compared to all of this volume back here. This was a real push higher. Now at the time you might have thought it was another buy the offer bar until the following day the highest volume in this period emerged, and then in response was a test bar, and while volume wasn't particularly low, it was reduced. And a test bar, a test for supply, is a narrow spread down bar closing mid to high on lower volume. We were up to here, and here's the test. You can see it is a very narrow spread bar on much reduced volume. The narrow spread and closed mid to high is quite good, and while the volume isn't particularly low, it's certainly lower than the previous bar, and that's all you need at this point really. You see in response, prices pushed higher on an increase in volume. It's only just closed higher than the previous up bar's high, but it has closed higher than the previous bar. And what you want to see on these bars as prices moving higher, just in general terms, you want to see expanding price and volume as bars go higher, and contracting price and volume as whenever price moves lower and tests for supply. So you can see spreads are increasing here, volumes are increasing, and then price comes back on a narrower spread and reduced volume, and then price pushes higher on increased volume. Now this bar here, maybe I'll just tidy that up. This bar here has some testing below the previous bar's close, so that was probably a test during the morning session, and it was found that supply was low, so this is an intraday test. This one here was a full day's test. Test in the morning, certainly soon after the open, the coast was clear and price pushes up in response, and that's most likely why that volume is lower, because there was testing to begin with and it didn't draw out much volume, and then price pushed higher in response. Now this bar is also a bit of a trick. You know how we saw back before when we saw the buy the offer bars and price then traded within that bar's range, well, price is pushed up high here. I call this an absorption bar. Now it looks like an upthrust at the time, and if price pushed lower in response, then well, maybe it is an upthrust. But when you're in an uptrend like this and price is really accelerating higher, you've got no reason for an upthrust to form just yet. Price isn't that much higher. There's no huge amount of profit taking to be done yet. It makes an upthrust in the wrong place generally. More likely, for me, it's an absorption bar. Price has pushed up like this, and then it's been allowed, perhaps during the afternoon, to be unsupported, and price falls back, and then there's a period of consolidation, just like there was before. Price moves higher, and then a period of consolidation, and that's taken place on the 1 bar, or the 1 day, here. And then in response, the next bar's up. So those 2 bars together form a single up bar. That looks more like that. So this was an absorption bar, and this was the response to the absorption bar. It's just 2 bars who have done the same job as 1 bar may have done here, for instance. Hopefully you understand that. If not, leave a little note in the messages and I'll try to explain it further. So then the next bar accelerates higher here. That's this volume here. There's a little gap up off the previous close. Gaps are generally done, especially in stocks, deliberately for a reason. And that would be to encourage people to keep holding and not sell into this rally, because whoever's running it is trying to mark the price up, and they're marking it up urgently and quickly. So a gap up from the previous close encourages holders to keep holding and not sell into the rally, and make it more difficult for whoever's pushing price higher. You can see that the next bar also gaps higher here. It's encouraging you to hold. Now, this bar has the highest volume we've seen for this whole period. It's actually quite massive volume, really high. And it price closes really poorly. You would be very concerned at the time that that may be an upthrust, especially with the gap up from the open. But the next bar would settle your nerves a bit. Spread narrows considerably. Price closes high on the bar and volume is reduced. It's not a great test. This is a much nicer looking test here, but it's a test all the same. Volume did reduce, and that's allowed the next bar to push higher on increasing volume. Now, don't get me wrong here. This bar here has gained about 25% in 1 day. This is not normal trading. If you're involved in something like this and you're long at some point, don't consider this normal trading. This is normal trading for this stock. These are dwarfed because these bars are so wide. That's actually over 25% in a day. And yes, prices closed strong on an increase in volume, but don't kid yourself, this is normal trading. This is not normal trading. As you can see, because like all the bars are exposed, you can see what's happened in response. This is most likely a pump and dump. I don't know for sure, it's most likely is. Anyway, the next bar gaps up again. You've had a gap there, you've had a gap here, you've had a little mini gap here. Gaps happen for a reason, up and down. It's to encourage you to hold, generally for a reason. Volume has increased, prices closed well off the high at mid-bar. Now, next bar's down. First actual serious down bar since this happened. This is your test bar. This is a wonky looking test bar, but that's the idea behind it, and price moved up in response. This isn't a test. This is supply. This is supply coming in right at the highs. I imagine during this period here that news has been great. It's been on YouTube, it may have been on the business channel. There's write-ups in the newspaper if they can get them to print it. The news would be big that this is going to the moon, it's great, you've got to get in, don't miss out. And all of that demand that's been created by pushing price up so rapidly like this starts to get sold into. And this is the beginning of it here. These two bars here, the close off the high here and the next bar down. This is the initial selling. There may have been some selling in this bar for sure, but that's preliminary, I would say. This was a final thrust higher. I imagine some supply started coming in here, and that's why the volume was so high. So they've rammed it higher as fast as they can, and then they started selling into the demand they've created. And that's then caused a gap down here. Here's the gap down, beware. And you've got a cascade lower for 4 days. This was just selling into the demand, unloading a position. This bar's interesting. You can see that it's closed back within the range of the previous bar. All the other ones closed below the previous bar's low. An element of support, of buying support, has come in here, whether it's the true believers in the stock or whether it's whoever's creating this pump and dump, wanting to not let price get much lower, and they're holding the stock up so that they can push it back higher to finish unloading their position. They may not have stopped yet. Their positions can be so large that they can't sell in a single day, or if they do, they'll push price down so far against themselves that it would be detrimental to their trading book. They've got to keep price up at times until they've been able to sell off their whole line. So you've had some buying support come in here, and then a second day. Initially it looked like temporary support in a downtrend, but the second day starts to confirm there is some buying support here, and then a little gap up to keep you holding, and then a big gap up and sell into the demand again. And this is this bar here. And you can tell that because the next bar is down. This is more than likely holding the market up. You can see that price did test below the previous bar's low, and this is effectively the last response the buyers were able to muster. This is the buyers exhausted. Demand was exhausted. This is what Wyckoff would have termed an upthrust after distribution. This is the final upthrust before price starts to tumble lower. Demand has been exhausted, the buyers are exhausted, and here's your first breakdown bar. There is still some modest support expected around this level where it came in previously, but this bar here was your first breakdown bar. Price continues lower. Now look at the first up bar in response. That's this volume here. It's lower than, it goes all the way back to this bar, which is this bar, before there's a lower volume. Look how weak the buyers are now. Remember, a lot of people would have bought up in these levels, and they're hoping for it to continue. But as price moves lower, as you'll see, more and more people are in pain because they're in a losing position, and that forces them to consider selling. And as they do sell, that just overwhelms any demand that does form, and price cascades lower. So there was just no demand in the market. You can see by that volume as price tried to go higher. Next bar is down. If we look, 2 bars later, there's another breakdown bar. Price pushes lower for 2 bars and then attempts to rise again. There's a little bit of volume on that, but it wasn't able to push price even higher than the previous bar's highs. Now the little shelf formed here where there was an attempt to support the market, but all the up bars were unable to push price higher, and then price breaks down again. Now one day when price is moving higher, these breakdown levels will be levels where stale supply has been trapped at a certain level like this, and that's where resistance will form. And when I first said that whenever price rises, it draws out increased supply, and first that comes from profit taking from positions bought lower, and second, the supply comes from the left. And these periods where price broke down previously are where supply will be drawn out from the left in the future. Now a lot of it will be sold for a loss. The people won't be able to hold on, and they'll sell out as price pushes lower. But there's always an element who won't take a loss, and they'll put it in the bottom drawer and hope that price comes back. Now currently there was a little attempt there to support the market. It was broken, and now you've got another attempt to support the market, and that was today, Friday the 18th, and that increased volume suggests there was some buying support come in just below the dollar. We have seen it before here, some buying support come in, next bar up, a shelf is formed, but it's been broken. And here there was a modest attempt as well. That's this bar here, and the little shelf forms where there's an attempt to support the market, but it gets broken. So there's an attempt to support the market here. Whether it's successful or not, it's too early to tell at the moment. But there is some buying support starting to emerge just there, as has happened previously, and we'll see if anything significant comes from that in the future. So you can see this pump now. Even if it wasn't a pump, it was certainly a distribution period. It happened really quickly. This first bar here was the first day back after the new year, and 15 days later, including a couple of weekends, so 11 days later, prices moved from 75 cents to $2.25. A huge rise in a very short period of time. That's not sustainable. It never would be sustainable. If anyone at the time thought it was sustainable, they were kidding themselves. But you can see back here, just for a quick recap, the accumulation most likely took place on these buy the offer bars, and there was a period of consolidation and absorption in response each time. This was like a period of bullish absorption and some consolidation in response, and then price exploded. Okay. Okay, thanks for joining me again. Hopefully you found that interesting and worthwhile. A number of the videos I've done so far are more about accumulation and the markup period, and this one is more about a distribution. Whether it's a pump and dump, I don't know. It sort of looks like it to me, and when I was asked to comment on the stock, that's what I suggested it was, mainly because it happened all so quickly. But maybe there's a legitimate reason for it, I don't know. But either way, there's definitely a period of supply coming in here and here, and it was finished through this period here, with most likely an upthrust after distribution there, and then price has broken down a number of times in response. And while there's been an element of buying support appear a couple of times, we're yet to see if it'll make a significant difference just yet, or whether price continues to drift lower. We'll just have to wait and see. Okay, thanks for your time. Hopefully that was interesting. See ya.